Hello, we are going to be telling you all about how salary sacrifice works. Car salary sacrifice specifically, how it's going to work for you as an individual, how it's going to work for your business, how you're going to convince your boss to get salary sacrifice in your business, all of these things. Just to introduce ourselves, we're from a business called Vehicle Consulting. We specialize in setting up admin-free salary sacrifice for businesses. My name's Tom. I'm the head of marketing, and I'm joined with my colleague Mike. Mike, would you just like to introduce yourself, please?
Yeah, no problem. I'm Mike Cottrill. I'm the salary sacrifice solutions leader at Vehicle Consulting.
Excellent. So I'm going to be interviewing Mike because Mike is our font of all knowledge when it comes to salary sacrifice. So he is the perfect person to get all of the information from. If you want to book a call with Mike, you're interested in getting salary sacrifice set up in your business, you can do that by scanning this QR code just here. You can choose a time and a date, book a call with Mike, and we can talk you through how to get started. Anyway, Mike, are you ready?
I am ready.
Excellent. Well, can you just explain to us in layman's terms what is salary sacrifice and why would anyone want it?
No problem at all. So salary sacrifice, it's an employer benefit that's offered to employees. And essentially what it allows them to do is forego a gross salary, and in return they're getting a perk. Now in this case it's an electric vehicle, and the savings come massively through income tax and NI savings because it's done at a gross level before tax deductions. So that's the main benefit. Salary sacrifice works exactly the same way as anything like pension contributions, cycle to work scheme, child tax credits, all the same thing, but obviously in this regard you're getting an electric vehicle.
Okay, so you're leasing an electric vehicle. Yeah. Can it be a hybrid?
It can be a hybrid.
Okay, we'll get onto that in a bit more detail in a minute.
Certain hybrids.
Okay, certain hybrids works well with electric, so you're leasing it and you're paying for it with your gross level. So does that mean with your pre-tax earnings? Is that right?
Absolutely. It's done at a gross level. So the reason why this scheme works so well, it's so beneficial for employees, is because it's done at a gross level. So then you're saving on your income tax and national insurance as well.
Okay, and can that be quite a lot of money that you're saving potentially?
It can be quite a significant amount of money, yeah.
Okay, so is it because you're paying for it with your gross salary instead of, say, you were leasing a car personally, where you pay 40% of your salary to the taxman, and then what's left over you use to pay for your car? You can use that 40% instead of giving it to the taxman.
Yeah, exactly. That's sort of the way to look at it. Essentially, what you're doing is you're using your pre-tax salary to source the vehicle rather than getting paid, paying your income tax, national insurance, and then going to a dealership and sourcing it with your net salary. And because you're doing it at a gross level, it just works out significantly cheaper.
So why is it just for electric cars, or it works for some hybrids as well?
So in theory, you could actually do salary sacrifice with any vehicle. Now, the reason it works so well with electrics is because everyone that opts into these vehicles, it does attract a benefit in kind. Now, for electric vehicles, benefit in kind for this financial year is fixed at 2%. It is rising next financial year, goes up 1% until it gets to 5% in 2028. But because it's so low at the moment and going forward, all the money that you're saving in income tax and national insurance, you're only paying such a small proportion back in benefit in kind tax. Now, as you alluded to before, this does work with hybrids as well, but probably more so plug-in hybrids, and only a certain kind of them. So plug-in hybrids, it's not like an electric vehicle where it has a fixed 2% benefit in kind. It's scalable depending on the electric range it does and the emissions it produces. So it goes from a greater from 5% all the way up until it can get to like 18, 20%, depending on its electric range.
Okay, what is this a percent of? You say electric cars, it's 2%.
Yeah, so it's the benefit in kind tax. So essentially, every vehicle that you take, it is on the HMRC class as a company car, so it does attract taxable benefit in kind. And this is a percent of the value of the vehicle is calculated.
Okay, so if a car was 50 grand, you'd be paying the benefit in kind is £1,000 a year. Does that mean you're paying £1,000 a year?
Yeah. So for example, if you're a 20% taxpayer, and you say you took a vehicle which is 50 grand, it'd be 2% of 50 grand, which is £1,000, and then depending on the taxpayer you are, is what you pay of that. So if you're a 20% taxpayer, you'd pay £200 of that 1,000. If you're a 40, it'd be £400. So obviously, if it was £200, you divide that by 12, and that's what you'd be paying per month.
Okay, so
a bit complicated, but
yeah, it is a bit complicated. But the point is, you're not paying £1,000 a year for that example. It's if you're a 20% taxpayer, it's 20% of £1,000.
Yeah, it's 20% of the amount which it attracts. If it's 2%.
Okay, so that's quite low on electric cars. You got to pay this on all different type of cars, but it's higher on hybrid cars.
Yeah, absolutely. So on hybrid cars, I mean, obviously specifically for salary sacrifice, it only really works with plug-in hybrids. There's a lot of cars at the minute which claim the hybrids What you want is a plug-in hybrid, which is basically the car can work solely on electric and it doesn't need the combustion engine to run. Now, these percentages range from the lowest you can get a plug-in hybrid vehicle is at 5%, which still works really well with salary sacrifice, but it can go all the way up to sort of 18, 20%. And then all the money you're saving on income tax and national insurance, you're paying quite a large, significant amount back in benefit in kind tax.
Okay.
And then the scheme doesn't look as beneficial to them
Yeah.
kind of vehicles.
Okay. And how much benefit in kind are you paying on petrol and diesel cars, for example?
Petrol and diesel vehicles, you wouldn't really do it with salary sacrifice. I mean, the norm now is we're getting to sort of even the best case scenario, low 30s, but you're going from 30s sort of all the way up to like 36, 37%. And then when you do them figures, it just works out too much.
So the reason we always go on about electric cars isn't because we're obsessed with electric cars.
No,
or
not.
We're trying to push. Are we getting kind of particularly incentivized for electric cars?
We're not, although I do like electric cars personally.
Okay.
It just works out best for the scheme. And ultimately what we're here to do is we're here to save people money.
Yep.
And most people's driving profiles, they're only doing sort of 5,000-10,000 miles a year. So we don't need a petrol or diesel vehicle. And if you're looking to get into the cheapest method of transport, electric vehicles through salary sacrifice are the cheapest method.
Yeah, exactly. I mean, we get quite a lot of people on our comments in our videos that are very suspicious of why we're always talking about electric cars only, as if we're not particularly obsessed with them. It makes no difference to us which type of car, but it's cheapest, isn't it? Because of that low benefit in kind on electric cars.
Yeah, exactly. I mean, there's no agenda to electric with ourselves, but ultimately what we want to do is push the cheapest route.
Yeah.
Essentially the cheapest route for motoring for most employees. Now, there is employer benefits to having electric vehicles, which I'm sure we'll touch on in a bit. But personally, from an employee's point of view, most employees just want the cheapest way to get into a vehicle, and this is it.
Okay, so let me just make sure I've got this straight. So doing it through salary sacrifice enables you to pay for the lease with your pre-tax earnings. So you save quite a lot on income tax mainly.
Yeah.
And then you pay a little bit back on benefit in kind if it's electric.
That's correct.
But if you were to do petrol, for example, that benefit in kind is going to be quite a lot, and making the savings you get with the income tax just gets eaten up.
Yeah, in most cases, a petrol or diesel would actually work out. It would be better to go and do it personally, which is then what we would advise.
Yeah. Okay. Right. So you can get petrol cars, but it's pointless doing it through salary sacrifice, basically.
Yeah, but it would be more expensive than getting an electric car through salary sacrifice, which is why we're pushing it.
Okay. So how does it? So the comparison. I mean, some people just don't think that the figures stack up between leasing an electric car personally or getting it through salary sacrifice. Is it actually cheaper?
Yeah, it's massively cheaper than doing it personally. I mean, for most cases, like you say, because you're saving on income tax and national insurance is where it mainly benefits. If you went to a dealership now and you took salary sacrifice out of the equation, it was just, I'm looking to get a car. If you went to a dealership, I would be 99% certain that a petrol or diesel version of exactly the same vehicle is going to be cheaper to lease personally. But we're not comparing going and personally leasing a petrol or diesel and a personally leasing an electric car. We're comparing to going out and personally leasing, say, a petrol or diesel, or getting an electric car through salary sacrifice. And when you compare them two, the figures just massively lean into the favour of the electric vehicle.
Okay, so I mean, say for example, if you just did a straight example, because we often compare electric to petrol, and people often ask us, why don't we compare the same car? So if we just stuck with an electric, getting it through salary sacrifice or leasing it personally, which is going to be cheaper?
It's going to be massively cheaper through salary sacrifice.
And that's because you're using your pre-tax earnings?
Yeah, I mean, there's a number of reasons why, but mainly using your pre-tax earnings, you're saving on income tax, you're saving on national insurance, so essentially you're making your salary go further. But there is other factors on top of that, such as obviously because it's leased through a business, you're getting further business discounts as well because it's sourcing at a larger level. So your company will get terms which you as a person wouldn't be able to do as well. So there is other components as to why it works out cheaper as well behind the scenes. But ultimately, regardless if it was exactly the same contract, you'd be massively saving on income tax and national insurance, so it would work out significantly cheaper.
Okay, so this whole thing is about saving money pretty much, isn't it?
Absolutely.
Can it be quite a lot of money?
It can be a significant amount of money.
How much are we talking compared to leasing?
I mean, we've done some examples, and I know, like I say, it's not for everyday cars, but we've compared like BMW 5 Series to Porsche Taycans, for example. So we're comparing cars which are 40 grand difference in value.
It's the videos that TikTok likes, isn't it?
It is the video that TikTok likes, but we're comparing cars which are not in the same category. There's 40 grand difference, and it's actually more cheap. It actually works out cheaper to have the car that's worth 40 grand more than having the petrol or diesel equivalent. So that's how much difference it could be. Now, And there's no exact answer. It depends on the mileage you do, what percentage taxpayer you are. But most commonly, we see saving of £250 to £50 per month savings. If you compare a personal lease to then going into sales, that's how large it could be.
Okay, so it is clearly quite a lot of money. Do people mainly use it just to save money and get a similar car to what they usually have, or do people usually step up a kind of level?
It depends. It can go into two aspects. So, I mean, some of them use it as an aspirational target. So I've usually always had, say, a Vauxhall Insignia or a normal premium suite, but now I can have a Tesla Model 3 for the same money. So I'm getting a much better car for the same money. Alternatively, people might like driving the vehicles that they do and use it as a cost-saving exercise. So I know what I like to drive, but by doing it this way, I'm saving £300 a month. So people use it in different. Some people want to get more car for the money, or some people just want to use that saving to save more money.
Yeah, it's funny because whenever we post a lot of videos using a range of different cars, and it's always the kind of more aspirational cars that get the most views. So like your BMWs, your Porsches, Audis, things like that. To me, it would appear that people like to go for step up a level, because something like this, it's kind of, I don't know, I don't want to say once in a lifetime, but it's an opportunity to get a car you've always wanted, isn't it?
Exactly. I mean, it goes without saying. I mean, this scheme and salary sacrifice will remain in some iteration going forward in the future. But while it's been confirmed until 2028 and there's chances to opt in and there's a chance to save money, do it now.
Yep.
Because you're saving money now. I mean, there will be some iteration and there'll be something which is cheaper, in which case in the future we'll push that. But at the moment, this is the cheapest route to get into a vehicle.
Yep.
Which is why we're heavily promoting it.
Yeah, exactly. That's literally the reason. We money talks, and we are trying to help people get the cheapest way, aren't we? Okay, so the thing is with salary sacrifice, you can't just go out and get a car through salary sacrifice. You've got to have a scheme set up in your business, haven't you?
Yeah, your employer has to set it up. It can only be done through PAYE, which obviously is through payroll. So it has to be done as a business contract hire.
Okay, so I want to talk about how you can get it set up in your business if you haven't already. Now, there's probably some people watching this who might be the decision maker, but there may be some people who aren't, who need to convince the decision maker on this. I mean, who is usually the decision maker on actually setting this up in a business?
So it's an interesting question, really. I mean, usually the way it comes about, or the way we get introduced, or people are usually CEOs or finance managers see us on LinkedIn or our promotions and then get in touch. Once we actually get in and they realise, yeah, this is a good idea, we want to implement this. Obviously, depending on the size of the company, we've got a large company, you've got your CEO who gets involved first, but usually then it filters through to HR, finance, payroll, and obviously, as we'll touch on in a bit, sometimes your environmental, if you're a large enough company where you're conscious about your ESG reporting, CSR reporting, sometimes they get involved because this does heavily link into ESG reporting as well.
So HR, finance, health and safety, who kind of deal with environmental stuff as well.
And if it's different to your HR payroll as well.
Okay. So if you want to try and convince someone in your business to get it, these are the people to focus on.
Yeah, I mean, ultimately, it's always seems to be HR to get in touch because it's an employee benefit. It's often an employee benefit, so you're improving your EVP, you're improving your employee benefits, your satisfaction. So HR tend to be the front runners in implementing this.
Okay, so if you wanted to convince HR or finance or your MD, whichever it might be, how would you go about convincing your boss if you wanted to get a salary sacrifice scheme set up?
So, I mean, ultimately what you want to do is get together all the information on it, the benefits of it, how it does. Obviously, you can always get in touch with ourselves and explain. Obviously, I think there's a link in this is where you plug it now, isn't it? There's a link in the top right, which you can scan, book a call with me. I can go through it. We've got FAQs, we've got information packs, which sort of go through salary sacrifice, explain it. There's some high-level overviews of it, pricing, to give an idea of the savings, and then sort of pass it on to them. That's probably how I would start with it.
Okay. Hello, Mark, by the way. Any questions that anyone has, please feel free to comment them. I will try and get the ones on TikTok here as well. If you're watching on LinkedIn, YouTube, Facebook, any of the others, comment your questions. We will happily answer them live for you. Just getting back to how you convince the decision maker and how to set it up. For me, what I think works is basically just tell them how well it can work for that individual. Say the managing director, they're probably into cars, they've probably got quite a nice car. If they've got a petrol car, they can almost definitely save a lot of money by using the scheme themselves or get a much nicer car.
Yeah.
So,
I mean, you are right. I mean, absolutely, this scheme benefits everyone, but obviously the amount you're sacrificing and where you sacrifice it from dictates how well the scheme could be. For example, it tends to be the the directors, which are high earners, potentially 40-45% taxpayers. And if you're sacrificing part of your gross salary, which falls under this 40-45%, then the income tax saving and national insurance saving you're making is much bigger than what you would be at 20%. So the saving's still there as a 20% saving, but when you get to 40-45% taxpayers, the money you're saving can be massive.
Yeah, it's particularly beneficial for 40 and 45% taxpayers as well, isn't it? Basically, the more tax you pay, the better.
Yeah, and obviously because this is done as a gross deduction, on paper, you as an employee would be earning less, which means the company pays less national insurance on you. Now, some employers pass that national insurance back and make the scheme even cheaper than what it was, but there is a benefit for the company as well in that regard as well.
Okay, so is it gonna? So you got a saving with national insurance?
Yes.
Okay, so does that mean it's overall is the salary sacrifice scheme going to cost the business anything?
So, in terms of a business point of view, it costs nothing without. Let's just caveat this with ourselves anyway.
Yeah.
It doesn't cost anything to set up the scheme. Obviously, whether you want a dedicated portal just to have access to SalSac, it doesn't cost the business anything. All these costs are borne by the employee, and it's done at a gross level. So, in terms of setting up a scheme or getting something in place, there's no cost for a business to set this up.
Okay.
So it's setting up a benefit which is so beneficial to the employees, and it's costing you nothing from your side.
Yeah, to be honest, I some feedback that I get from people I speak to every day is that people are suspicious. Why is it free? It doesn't make sense. Is it literally because it's just paid? There is obviously people are getting cars, and cars have to be paid for, but that is paid for by the employee. It's not the business.
No, exactly. All these deductions are at a gross level, so it's better for an employee to get this vehicle rather than taking their net salary and do it that way, because they've already been taxed on it. So they may as well source it through this way because they're saving an income tax. And from a business, you're just essentially facilitating it and getting the benefits of discounts through businesses, but you're just basically facilitating the cost for it, done at a gross level through payroll, and then the savings are applied there. So from a business's point of view, there's actually no physical cost to them.
Okay, so if you want to convince the boss, you say you are going to benefit from it, particularly because you're probably a 40 or a 45% taxpayer, so you can get a rather nice Porsche. For example, Porsche Taycan is the one to go for. Just give them a Porsche brochure or send them a link to the Porsche Taycan website and just say, have a look at that, is what I would say. Then say it's not going to cost the business anything. The employees pay for everything. That's going to wet the whistle, I would have thought. Now, one question they immediately will say, what's the risk?
And I suppose it is the best question to ask, really. Ultimately, obviously, they're suspicious already because there's no cost.
Yeah.
In regards to risk, I mean, the risk is only predominantly by who you decide to partner with, essentially. I mean, the main question is, what happens if all my employees get vehicles and then they leave?
Yeah.
That is the biggest question we get asked, and it's a fair question to ask.
Because the lease is in the business's name, isn't it? It's not in the employee's name.
The lease is in the business's name. So if you didn't take any kind of protection or anything and then your employee just decided to leave, the contract's not with the employee, it's with the business. So the finance company who's owned by the vehicle will come to you to return the vehicle, which could attract early termination charges. Now, the answer to this is a product called early termination protection, which is a bolt-on product to the SalSac scheme. And once again, it's a cost borne by the employee, and it's calculated as a certain proportion of the rental of the vehicle. But essentially what it means is if an employee leaves the business, if they go on long-term sick, maternity, paternity, loss of license due to medical grounds, basically covering any unforeseen circumstances, the vehicle is returned to the finance company and there's no cost to the employer to return the vehicle. So once again, this cost is borne by the employee, and most employees want this protection built on anyway, because what they don't want to be is sort of tied to this car, and if circumstances change or they want to leave the job or they go on maternity, paternity, they haven't got this looming over them that they've got this rental that they need to pay. And it's a cost borne by the employee, so it's still costing the business absolutely nothing to implement this scheme.
Okay,
and it gives them the protection that they want.
Okay, so is that like a month? It's got a monthly premium, is it?
Yeah, exactly correct. It's just a certain percentage monthly premium added on to the rental.
And the employee pays for that as well?
Yeah, but what's worth saying is this is done at a gross level. So say, for example, the early termination protection was £40. That's £40 at a gross level. So you can take 20, 40, 45% off that when it's sort of gone through payroll anyway, because this is all still done at a gross level for the employee.
Okay, so I mean, realistically, this is something a business should be considering if you're getting this scheme, isn't it? Because, I mean, again, I've had comments, people saying this week on our videos that they've got a car through the scheme, they've left the business, and they still have to continue paying for the car because they've got some clause set up like that. Would you How do you avoid that happening?
I mean, like you say, it would be who you partner with. I mean, we would understand your company size and requirements. I mean, to be fair, anyone that's setting up salary sacrifice at any kind of level, I would highly recommend taking early termination protection, because ultimately what we want to do is mitigate your risk for a company while offering the best benefits package you can to your employees.
Yeah, well, that's the thing. It's mitigates the risk for the business, but as well, from the employee point of view, employees don't want to be in this situation where if they do leave the business, which it happens and it's fair enough, they don't want to be paying for a car that they no longer have, do they?
No, exactly. And like you say, the early termination protection can go on further than that as well. So it also covers you for things such as maternity and paternity. So if one of your employees goes off on maternity paternity, you don't actually have to return the vehicle.
Mm-hmm.
The early termination protection will cover the payments, and that's up to sort of £10,000 or 12 months, whichever comes first.
Could they continue using the car in that
So
instance?
absolutely, so they continue using the vehicle. The vehicle cost is covered for that duration of the agreement, and then when they return, they just go back to the normal deductions, and they don't expect to pay that money back. It's just wiped off. So in other senses, there's also protection and benefits to it from that side as well.
Okay, so I mean, this early termination protection, it's worthwhile understanding how it works and the different situations, because there are different types of early termination protection, aren't there?
Yeah, it goes without saying. I mean, obviously, this is our protection. Every supplier has got different agreements, have different early termination protections. So just because ours covers this doesn't mean someone else's will.
Yep.
So when you do get into the sense of setting up a salary sacrifice solution, just go through this and check, because it's worth knowing basically what you're covered for.
Mm-hmm. And is a business with, say, 5,000 staff going to take the same early termination protection as a business who has 5 staff?
No, not necessarily, because like you say, sometimes businesses, for example, with 5 staff, they might all be director or direct levels, or it could be a partnership, for example, where they've all got an ownership of the vehicle, in which case the chances of them leaving are minimal.
Mm-hmm.
Or, like you say, some companies, I am the business, so I'm not going to go anywhere. So then why would you take early termination protection for something which isn't needed? So, like you say, ultimately every company is different, and what we would want to do and what we do, where we're probably a bit atypical to different suppliers, is we sort of have these consultations and we go through a process where we understand what you need as a business to protect you the most, and then we build a system around that.
Mm-hmm.
Whereas others, it's just sort of like an off-the-shelf system, like one size fits all. There you go. If you want to order a vehicle, we don't do it that way. We go through it, educate, we build FAQs, and like I say, I'd say a more robust scheme where when we actually launch the scheme, all the information packages, your employees have been pre-educated beforehand, so everyone knows what they're going into before they do it.
Okay, right. So if we're convincing the boss or the decision maker to get salary sacrifice, show them the Porsche Taycan, tell them it's free. The other one is
the scheme of the Taycan.
not the Taycan, unfortunately. And then tell them that the risk is absolutely minimized by this thing called early termination protection. So if an employee leaves, the early termination fee is covered. Okay, right. So that's pretty good. I mean, are there any other benefits to why a business would actually want it?
There's numerous benefits from why a business would launch. Obviously, we've gone straight down the route of it, and the ultimate reason is it's saving your employees money.
Yeah, I mean that's the big big daddy.
Exactly. I mean, apart from people's mortgages, 90% of people, this is their next largest outgoing vehicle, and if you can massively reduce that for your employees, you're massively benefiting their general life as well, because you're making their salary go further. But in terms of straightforward as a business, what other benefits they are? I mean, there's quite a few. I mean, we'll probably touch on the most common one. It is the most requested, or one of the most requested perks at the minute, of employer benefits. Depending on what sort of category of company you are and where you're based, sometimes it's expected from people joining you, like say IT companies, healthcare, tech companies. They sort of want this benefit before they join you. Whereas other ways it can sort of differentiate you from different suppliers. So obviously, if you can make your employee's salary go further, they might get a job offer which might pay $2-3 grand more, but they don't offer salary sacrifice. So if they're leaving your business, they've got to take that precaution that I am leaving. I'm going to have to hand my vehicle back potentially, and then by the time I've actually worked it, I need to get a car. But now that I've got to get a car myself, it's actually not beneficial for me to leave. So you're basically improving your employee side, which is benefiting them, and then the other side is ESG, which we've touched on.
What's ESG? Sorry.
So ESG reporting is basically an overview, is what I would say, of your company's profile. Links quite heavily into that environmental, but there is social sides of it. Now, with this, if you are large enough to do ESG reporting, it probably comes mainly under the environmental and social side of ESG. And you can actually use this. So every employee which opts into salary sacrifice, all their commuting to work, any business miles you do, you can use that CO2 sort of reduction to offset other parts of your company. So if you've got a large van fleet, for example, which you physically can't go to electric because it just isn't feasible at the moment, you can use all your employees' sort of reduction in CO2s to offset your van fleet to try and go more carbon neutral.
Okay, so if you are a business that has a high CO2 emissions and you need to get that down, this can help you do that as well.
Yeah, absolutely, can massively offset.
Okay, just getting back to what you were saying about how it's good for attracting staff to your business and keeping staff at your business as well, because it can enable them to have the money to go further. Are there any industries or types of businesses that it works particularly well for? I mean, I'm guessing it's businesses that have quite a lot of well-paid staff. It works quite well for.
I mean, this can work well for any industry, ultimately. I mean, the benefits there, the savings are there. Now, with going this, obviously, you can't sacrifice, and this goes with pension contributions, anything, you can't sacrifice below minimum wage. So there is a certain threshold of where you can't sort of go below. So if your staff is on minimum wage, we wouldn't be able to do a salary sacrifice scheme for them, because when we apply the deductions, it takes them below minimum wage, and the only way you could do that is you as an employer would have to top up their wage back to minimum wage. So then you're essentially paying for it. There's not a hard and fast rule of where this fits, because obviously at different times of the year, different months, car prices go up and down depending on what special offers we do. We usually say, obviously, with minimum wage now just going up, I would say 30 grand is probably a safe area where we can still offer a few small electric vehicles that fit that requirement. But sort of 30k and above, I would say, fits quite well.
Okay. What about Scotland, for example? Scottish businesses. We get loads of Scottish businesses, don't we?
Yeah, we strangely do.
Well, is it not because they pay a lot? Well, have a higher rate of income tax than in England?
They do. I mean, I have to get a bit more well versed with it. I'm pretty sure, I'm not sure about this financial year, but I'm pretty sure you hit a 40. I think it's 42% in Scotland, and I think you hit it a lot sooner. So I think anything over 36 grand, I've got me off 40 around the area. Whereas in the UK, it's anything over, I think it's 52. You then become a 40% taxpayer. It comes a lot lower, and the percentage is a lot higher. So if you can sacrifice a proportion of your wage in that, essentially you're giving up a pie or salary which would have attracted 42% income tax. So the saving is much more. So
basically, if you have a lot of staff who are in a higher tax bracket, whether it's in Scotland or England or wherever, this is going to be appealing to them, isn't it?
Yeah, absolutely. And whether we do it as a normal sort of consultation, do the pricing, or if they do go on our portal, when they register to our portal to get onto the scheme and see the prices, it does ask them, are they a Scottish taxpayer? And if they are, they can tick it, and then the prices will change to what a Scottish taxpayer would be.
Okay, no worries. Right, so I've got a load of quick fire questions that just kind of come up time and time again that I just want to cover. Any questions that you guys might have, please do comment them, and I will put them to Mike.
I was going to say, I think we've had a couple over there, but unfortunately they're getting
sorry guys,
they're getting dropped down by people joining. So if you do have them, try and resend it, and we'll keep an eye on them.
Yes. Okay. So, is it just new cars?
At the minute, yes, it is just new cars with ourselves. The used electric vehicle market is quite volatile at the minute, and at the minute it just works out cheaper to do it on brand new vehicles.
No worries. How do you order the car?
So depending on how you've done it, if you're a larger company where we set up a dedicated portal, you would register to the portal. That loads every vehicle which the company has allowed to be on there. For ourselves, if it can be sourced in the UK, we can provide it. You click on it, pick your mileage profile, how long you want the vehicle for, and you can request to order it from there. If it's not done that way, it would be a call with myself. I'd go through a few details, explain salary sacrifice, and then I could manually send you quotes. Okay, the prices that we do on our videos, people comment them saying, why are yours so cheap? I mean, it's a bit of a plug, this one, but people don't believe us. Why ours are so cheap? Why are they so cheap? Essentially, like you say, it's just all the money you save on an income tax and national insurance. I don't think people realise how much you can physically save on there. And obviously, the more expensive the vehicle and the higher the gross deduction, the more income tax you're saving.
No, but I actually mean compared to other salary sacrifice schemes.
Oh, right. You mean as in other competitors?
Yeah.
I mean, well, we are a broker vehicle consulting. We've got a panel of funders. I think we've got 12 at the moment. And what we do is whenever we go out to a panel of funders. So certain other providers might write their own books. And when I say write their own books, it means they are the finance house. So they're only comparing their prices to themselves.
Mm-hmm.
When we get a vehicle request, for example, say a Tesla Model 3, we then go to our panel of 12 funders, find out who is offering that vehicle the cheapest, and then we use that pricing alongside our potentially vehicle insurance, early termination protection, and we put it all together. That's how we are the cheapest.
So because you've got multiple finance providers, there's competition there, and they compete for prices, and that's how you get a better price.
Absolutely. Like I say, all these finance companies are competing for our pricing, and what we do is we take every vehicle to the market, find out who's best on it, and then offer you the best pricing based upon that.
Okay, so if you have a provider who's just got one finance provider, then there's no competition, therefore they don't have to be competitively priced. Is that about right?
Yeah, exactly. I mean, they're guessing the prices against themselves. So ultimately speaking, it might not be because they're trying to make money. It might just be that they think that vehicle's going to depreciate quicker than what another finance company does.
Okay, yeah, fair enough. Okay. Does it affect your credit rating if you get a car on salary sacrifice?
So it doesn't affect your credit rating. Obviously, there's no searches on you. The contract is between the business and the finance company. So there's no individual credit searches on you.
Mm-hmm.
It should worth noting you are giving up a gross proportion of your salary.
Yep.
So on paper, it would look like you're earning less when you do your P60. However, most banks now, and most of our finance companies that we have are banks, you can get a letter from your employer which says you are earning this much, you're deducting this much due to salary sacrifice, and most mortgage lenders, bank lenders, take that as confirmation of what you're actually earning. We call it your nominal wage.
Okay, no worries. Is it only for high earners?
It's not only for high earners. No, as mentioned before, obviously we can't deduct below minimum wage.
Yep.
But that doesn't mean people in a lower earning bracket can't do it. Ultimately, you're giving up your salary. You'd be saving 20%. Obviously, it does work out slightly better for high earners because they're in a higher tax bracket, but ultimately the scheme benefits everyone.
Okay, do you own the car?
You do not own the car, no.
It's a lease, isn't it?
It is a lease, yeah. It's owned by the finance company.
So what happens at the end? You just hand it back?
Yeah, which is one of the main benefits. You don't have to worry about resale values. Everyone's saying, oh, electric vehicles are plummeting in value.
Yep.
That's not your worry.
Okay.
It's the finance company's worry.
No worries. Do you have to pay company car tax on it?
You do pay company car tax, which is benefit in kind tax.
Okay, and that's low on electric
Yeah,
cars.
low on electric, and obviously scalable on plug-in hybrids. It can be low, but just something to be cautious about.
Okay. Can you get a salary sacrifice car without salary sacrifice being set up in your place of employment?
No, it has to be set up by your employer. All the deductions are done through payroll, so it has to be through PAYE.
Okay. Is it just one car per employee?
Depends on what the company's criteria is and what they want to implement. We do have, ultimately, with ourselves, if your wage allows it, you can have more than one vehicle. It's not a problem. As long as you don't go below minimum wage, you can have the vehicle, but it's an employer's preference on whether they want to offer that out or not.
Okay, so if my employer allows it and I earn 120 grand and I want to get a car for myself and my partner, I can do that.
Yeah, well, it goes without saying, some of these vehicles, even though it's leased with your company, it's an employer benefit. So a lot of people actually lease these vehicles, and it might be for, say, their partner doing the school run, for example, just because it's significantly cheaper to get a vehicle through that. So some of these vehicles, they don't have to be used for business purposes. Some people actually take the vehicle, it might be the partner that's driving the vehicle, and that's not a problem at all.
Okay, yeah, I was about to ask you on that. Can it be used for personal use, or is it just business use?
It's actually, it's like I say, it's an employee benefit. It's intended for personal use. It can be, if you take our insurance policy, which you can build into it, it can be used for business purposes.
Mm-hmm.
But ultimately, some of these vehicles are never used for business purposes and they're solely for personal benefit.
Yeah, this is a myth that some people think it's just for business use, but it's not, because you pay this benefit in kind, right?
Exactly. Although it is technically entitled to HMRC, a company car, doesn't have to be used as a company car.
Okay, now I just want to talk about why businesses might get salary sacrifice set up in the business if they've already got a company car scheme. So, what's the difference? Which is better?
I mean, they're two completely different products. A company car, in my eyes, and what a company car is if a person joins a company and a lot of their day-to-day driving is going to be for business purposes, which tends to be people that are doing 25,000 miles a year, then it's a company car. They take a company car because that vehicle is being used for business purposes.
Mm-hmm.
A salary sacrifice could be for someone in an office who never actually does any business miles. It just benefits them to have a vehicle.
They just want to get a car.
You just want to get a car. It's the cheapest way for me to get a car, and this is what I'm going to do. They're two completely different. solutions.
How does it compare then to a company who might have they give you an allowance, like a car allowance?
So this actually probably works, and this is probably where we see the majority of people. When we set up the scheme, we see the majority of take up with people that receive company car allowance, and the reason being is if a company car is never an option and you're just getting given a car allowance, if you're a 40% taxpayer and you're getting paid £500 car allowance, for example, you don't see £500 of it, you're getting taxed the usual 40%, and then what you're actually left with, you then have to use to go and source a vehicle, which in today's market is just, it's difficult. You usually are still going to have an outlay from yourself, especially then to insure it as well, and maintain it. Whereas with salary sacrifice, you can use the total amount because it's done at a gross level. So that £500 that you're getting, you can use all of it because it's done before taxes apply.
Right. Okay.
So then it makes, when you actually look at the scheme, then it makes it even more beneficial to them because it's like, well, I'm using all of it.
Yeah. Okay. Right. So if you've got that £500 allowance, say you're a 40% taxpayer, after that 40%, you've actually only got 300 quid left per month to spend. Whereas with salary sacrifice, you'd put that £500 on your salary. Is that about right?
That's correct.
Put it on your salary, use it completely because you're using it before tax, so you can spend the entire 500 quid.
Yes.
Okay, right. So that's why it's better
and that's why it's
to do it that way.
beneficial. So then people in them positions are like, well, this makes massive sense to me. I'm going to go down this route.
Yeah, literally don't lose anything. Just you can afford a nicer car, basically.
You just make it. Once again, it's going back to it. You're making someone's salary go further by offering it.
Okay, perfect. Now, in terms of how the scheme is run, is it a lot of faff? That's another thing that people, business owners, for example, might worry about. Is it's going to be a nightmare to run? Is it?
Depends, once again, is who you use as a provider. I mean, I know a lot of this is subjective, but a lot of it does depend. In terms of, like, say, potential risk, admin burden, all these risks aren't sort of, they are problems to be aware of, but it totally depends on who you've got setting it up as to how much of a problem they become. Like say, we are a tailored solution. We do pride ourselves on fleet management, so we would say the admin burden is very minimal. We do all the work, we do all the payroll report, we calculate all the deductions to apply. Ultimately, we do everything. The only thing we can't do is deduct your employee's salary. So we position ourselves between, it tends to be HR, who your employees go to and ask questions about. We position ourselves in between. We answer all the questions from your employees, we answer all of it, and essentially what we do is then just feed the payroll report once they've had a request to order it, the vehicle's been ordered. We then just report back what the deductions are to payroll. They apply the deductions, and because nothing changes, so for example, if you take our vehicle insurance and you have 3 accidents in the first year, the actual payment doesn't change. What you pay in month 1 as a gross deduction is the same for the 3 years you might take the contract. So from a payroll point of view, they apply a deduction, they apply it as a recurring 36-month deduction, and that's as much as they have to get involved with.
Okay, yeah, I mean, a lot of HR people are, reluctant to get salary sacrifice.
Understandably, because ultimately it's them that it falls upon. If no one's there to sort of do the admin work like we do, all these questions about SalSec, how does it work, how does my payslip going to look, it all falls onto them, which is why they're reluctant, because that then does become a lot of work.
So say we did it with Vehicle Consulting.
Yes.
Who takes care of all the admin. So if an employee gets a car through salary sacrifice, gets a flat tyre, what happens in that instance? Are they phoning HR or are they phoning you?
Everyone that orders a vehicle for ourselves to get access to a dedicated portal, it's called iDrive, and essentially all their documents are on there. So if you've took vehicle insurance for ourselves, your insurance policy's on there, your maintenance policy's on there, everything you can get onto basically. So if you're out of hours and we're not in, you can call the company, book it in for a service, book it in for a tyre replacement. At the same time as if it's in working hours, you can call us and we can assist you with it as well. So you've got to, like say, you've always got a point of contact to call with ourselves. Okay, and you say that's different to how some other salary sacrifice companies work. Yeah, how do some others work? So with ourselves, you get a dedicated account manager for us. So when your contract starts, the person who you speak to the first time will be who you speak to throughout the lifestyle of the contract. And that's probably, it doesn't sound like a big thing, but that is a big thing, because what you'll find with a lot of other companies, they are bigger than us in terms of that. And when you call up, you're getting a different person each time. They're not used to your account before. They've not got notes on the file, and it then becomes difficult. And that's probably where I would say it's difficult. But you've always got a central contact, a vehicle consultant, and you can always go back to the same person. Okay, and without meaning to blow our own trumpets too much, like the people working here do tend to actually understand the car industry and they're very knowledgeable about cars as well, aren't they? We like to think so. Well, yeah, with a name like Vehicle Consulting, you would hope so, wouldn't you? Okay,
Okay, well, that sounds pretty good. I want to talk about risks and worries and things that can go wrong. We've talked about what happens if an employee leaves. We've got early termination protection for that. We've talked about how much admin and stuff comes with it. You can outsource it to us if you do it through us. What about in terms of what I foresee what I know happens because I see comments on it on our videos is that people race in to get in a car on salary sacrifice. Their provider hasn't educated them whatsoever about how it works. They get a car and then they see the first payslip. They don't know what the amount missing on the payslip is. They see the tax codes changed. They just immediately start panicking. It's a massive HR problem.
Yeah.
That can happen, can't it? Easily, but it's avoidable.
Yeah, we do get this a lot of times with people that haven't, to clarify, that haven't set with ourselves.
Yes.
Where you jump into it, obviously you go on there and you can see the savings. Oh, I'm going to get a Tesla and it's going to cost me £300 a month. Now, that's a net cost and that's physically what it's costing net now. The problem is this is done at a gross level.
Mm-hmm.
And a lot of employees don't look at it or care about it. Most employees want to see what's usually in the bottom right of the pay slip of what I'm physically going to get in my bank account every month. Whereas this is done at a gross level.
Mm-hmm.
So what we do is before we even set up a scheme, we do this employee education. We explain how it shows, like I say, give an idea of a copy of the payslip, how it would show the deductions, and then explain where the net amount and how much the saving is. Because obviously, it's deducted at a gross. You save on income tax, you save on national insurance, and then your tax code would change because obviously it does attract benefit in kind. So your tax code would sort of alter to replace that.
So the benefit in kind is kind of paid for by adjusting the tax code.
Yeah, exactly. That's where it is. It's just your tax code. So I think at the minute it's 12,570 a normal tax code.
Yeah.
If you took a vehicle, it would slightly reduce to cover the cost of what the benefit in kind tax would be per year.
Yeah, that's one thing that people seem to often panic about is the tax code changing, but it's normal, isn't it?
Yeah, it is normal. I mean, on our quotations, we show you how much it's cost you. We show you what you're paying in benefit in kind. So if you actually took the time and obviously spoke to us, we'd explain why your tax code is reduced as much because your benefit in kind is £200 a year. For example, on a vehicle, we've reduced your tax code. Well, we haven't. HMRC's reduced your tax code by this much to cover for that cost.
Mm-hmm. You see that some salary sacrifice providers will say, we can get this set up for you in 2 days. Would you say that's asking for trouble?
I'd say you could absolutely. We could set you up in 2 days, but we wouldn't. And like I say, there's a number of reasons why, but ultimately we find it causes more problems for us and you as a company because you just launch a scheme, employees don't understand it, they go on it, they see the savings, they try and order a vehicle, and then you get X amount of employees that have ordered the can, and a month later they're like, what's this? I don't understand.
Yeah, exactly.
How does it work? It's just counterintuitive. We find we get less take up in the scheme because obviously then you have a bad experience for the first people that opt into it, and then it just stems throughout there. So I like to say sort of 4 to 6 weeks, depending on the size of the company and how complex it is. But we like to do this because we like to, one, understand who's involved in this, why you're looking to launch salary sacrifice. Are you doing it because I just want it as a benefit? Or are you doing it because we want to improve our EVP? You're trying to improve your ESG reporting. We want to understand why you want to offer it, and then we build the scheme around that. And then from there is we build employee FAQs. Now, all of our, like I say, we're a tailorable service. All of our FAQs are individualized and dedicated to certain businesses about what they want.
Mm-hmm.
And then we do driver education off the back of it before we launch. This could be very similar to this, like a live webinar, but it might be closed off just for the employee group.
Mm-hmm.
They can ask us questions. We can answer any queries. We send out information on it, depending on where you are. Sometimes we actually physically come out with vehicles, talking through it, explain it. And then when we actually launch the scheme, your employees are already educated and understand. So one, you don't get that influx of people saying, this looks cheap, I'm going to order it. They're ordering it because they understand how it works and it benefits them.
Yeah, knowing the employees knowing and understanding how it works, things like the tax code changing, it's just going to make the whole thing run more smoothly. It's not going to leave a bitter taste in anyone's mouth because they're not going to get into something that they didn't expect.
Exactly. I mean, it sounds probably counterintuitive, but we want to educate people just as much out of the scheme as we do into the scheme.
Yeah.
Because if you get an employee saying, "Oh, I'm doing 25,000 miles a year. I live in a flat. I can't put a charger at home, but that price looks so cheap. I want a car."
Yep.
But then, realistically speaking, although I would love to talk you into an electric car, it's probably not the best route for you.
Mm.
In which case, I could say electric might not suit you, but there is still potentially a benefit of here, but you would be better suited to plug-in hybrid, for example.
Mm-hmm.
So it might cost you a little bit more, but ultimately we're saving a problem down the line when you get a vehicle and I can't function it.
Completely get it. Okay, one other thing that can go wrong not with ourselves, but some salary sacrifice providers offer something, they do something called accelerated payments, don't
Yes.
they? Can you explain to me what that is?
I can explain to you what it is, but I still have no idea what. Well, I think I've got a logic of why they do it, but it just makes no sense to me.
Go on then. What is
So
it?
accelerated payments is essentially what they do is they increase the gross deduction for say months 1 to 6, and then reduce it throughout the contract. So, but then the problem is they usually advertise on their website as an average payment. Now the problem with this is you get really large gross deductions a month, maybe 1 to 6. But then you're changing them throughout as well. So one, your employee never really knows, unless they've got it in front of them, what they're getting deducted each month. And the other side of it is it's a massive headache for HR and payroll because they're having to go in to accounts and change the actual deduction for employee every single month.
Okay, so I mean, so they basically front load the payments. So your first few payments are going to be really, really high, and then they kind of get lower as time goes by over the course of the contract.
Yeah, exactly that. I mean, I imagine it's something to do with the early termination protection to cover it earlier on, but it just doesn't make sense for a business, in my opinion.
Also, I know for a fact that some employees who have got a car through that scheme weren't expecting that to happen. I mean, we all email, we will ignore emails sometimes. What I foresee happening if you have that accelerated payments is, yes, it's explained in an email. Some staff are going to ignore it. First payment comes along and there's a massive chunk taken out of their salary, which they weren't expecting.
I think the main problem with that is the people who predominantly do this have it as an average payment on their website. So someone looks at it, it's £500 a month. Well, it's not. It's £500 as an average over this much. Months 1 to 6, it's actually £700. And then months maybe 30 to 36, it's actually £350, which is great at that point, but it's not. It's just there's no continuity to it, and I don't think it benefits employees or employers.
So a key thing to ask if you are looking at salary sacrifice providers, I would say, is to ask, do they do accelerated payments? And there is quite a big salary sacrifice provider who does that, isn't there?
I mean, just thinking off the top of my head as well, is that could also affect someone's the first set of accelerated payments could take people below minimum wage.
Yes, true.
If they're on the sort of cusp of opting into it. So they might not even be. It might actually take people out of the scheme who were actually eligible if it was done correctly.
Yeah, I get you. Okay, right. Well, I think we've covered pretty much everything. The last thing I want to just ask you is how do say people want to get started with it through ourselves? How do they do it? What's the process?
Yeah, no problem. So I think we'd Leonard put it forward. There's a little
QR code.
Yeah, a little QR code there. If you scan that, you can book in a call with me. Ultimately, you can message me on LinkedIn, get my email address. What we'll do is I'll pick up a call. We'll have a quick chat first, see if salary sacrifice is something that's right for your business, and one of us will get in touch and then go forward with the next steps. Usually, we have a quick sort of 5-10 minute call. If it's beneficial, we'll set up a Teams call, usually with the larger group of people who are interested in it, so HR, finance. We go through it there because ultimately HR will have different questions to finance, which will have different questions to the environmental ESG side of it. We answer all them questions, and then from there, we usually do what's called an implementation meeting. We go through the process, go through requirements, i.e., who's eligible to your scheme in your business, and then we set it up from there.
Okay, and if you aren't the decision maker, you probably will need to influence the decision maker. We've got a PDF guide which you can send over to them. Just comment PDF whether you're watching this live or whether you're watching the recorded version. I will send that over to you. Send that on to HR, finance, the MD or the CEO, and try and get the ball rolling that way, I would say. Would you say that's fair?
Yeah, I would say that's fair.
Okay, well, we will leave it there, but thank you very much for joining us, anyone who has joined us. Thank you very much, Mike.
No, thank you.
And we hope you all have a good afternoon. As I said, if you want to get in touch, you can scan this QR code and book a call, and we get the ball rolling for salary sacrifice with you. Thank you very much.